The next master trainer that we're going to have joining us is Hubert Sensors with hubertsensors.com. Once again, this is master trainer Hubert Sensors with hubertsensors.com. Now, Hubert Sensors is a skilled professional day trader and successful entrepreneur. His philosophy is that if you need to accomplish something in life, find someone who is passionate about the topic of your interest and learn everything that they know about it. That philosophy has made Hubert Sensors a successful day trader today. Hubert is a firm believer that you need to have your own style and method of trading that works for you. He currently owns hubertsensors.com and is the co-founder of tradethemarkets.com. He and his companies have been featured on Bloomberg, CNN, CNBC, Stocks and Commodities, and Traders Expo, just to name a few. He holds a Series 3 and 30 license and is a principal at Razor Trading Holdings. Hubert, his wife of over 20 years, Lisa, and their 3 children reside in Versailles, Kentucky. You can usually find them at one of their children's sporting events. So please welcome Hubert Sensors.
Thank you very much. All right, so I've got 45 minutes, and this presentation usually takes about an hour and a half. So I'm going to skip over a few things. But before I get started, I am registered. I'm a Series 3 and a Series 30, which means the NFA, if I say something wrong, could potentially fine me. So I say potentially a lot. So hopefully everybody understands. I do have to give you a quick disclaimer. Heads up, trading is hazardous to your wealth if you don't know what you're doing. You are probably going to lose quite a bit of money trying to figure out this game we call trading. All right. Now, I'm going to be showing you some hypothetical and some simulated performance results. So if you have a question on which one is which, just ask me and I'll tell you. All right. A Series 3 or a Series 30 means nothing, really. All it means is I took a test and I got a 70 on it. It does not mean that I have any more trading knowledge or specialized skill than you do. It also does not mean that the NFA and the CFT guarantee me, back me, or certify that I know what the heck I'm talking about. So all it really means is I studied and took a test and got a 70 on it. And the reason I did that is because I own my own futures brokerage firm. In order to clear my trades cheaper, I wanted to be the house instead of being, I wanted to be the casino instead of just always being going against the casino. So I started up my own brokerage firm to clear my own trades. So that's really the reason I did that. Now, I like to go above and beyond and give the disclaimer even more merit. Heads up, if you're trading, never trade with more money than you can afford to lose with. Always trade with discretionary income. What we do is serious, and you could lose a lot of money if you do it wrong. So let's get started. All right, so there's the warning now that we got that out of the way. And my slides should start to advance if my PC starts working. My name is Hubert Sensors, and this is my no BS approach to trading and investing. In the trading and investing niche, I am kind of known as the no BS guy. Sometimes that's really, really good. Sometimes it gets me in a little bit of trouble with exchanges and stuff like that and other brokerage firms, but it is what it is. Now, I've already told you the disclaimer, and hopefully I've scared a few of you off that think that this is a get-rich-quick scheme. This is not a get-rich-quick scheme. If you are a holy grail seeker or a get-rich-quick scheme, you're probably in the wrong business, and you'd be better off starting up a traditional business than you would trading, because it's that hard, okay? Now, what I believe internally myself, my own belief system is that if you get around other people, and I've got a picture with a collage of some either famous or wealthy people that I hang out with, if you get around other famous people, some of this stuff will just rub off on you by default. Now, heads up, you will have to take action. You can't just hang out with Richard Branson and think that you're going to be a billionaire. You need to ask him some questions like, hey, how did you do that? Hey, here's what my business is. What would you recommend? Hey, how can I help your charitable foundation? Same thing with Mr. Wonderful and Dave Ramsey and Paul Abdul. Like, these are all people that I either have worked with in the past or currently advise on different situations, or they advise me. I am the fat little fellow over here on the right, and the microphone that I'm talking to you on right now is this microphone right here. I'm actually in my office where I'm in front of 6 24-inch LCD monitors. Today I'm sitting down. Usually I have a standing desk that I hit a button and it goes up, and hit a button and it goes down. But anyway, that's who I am. That's what I'm about. So I don't want to waste a lot of your time going over stuff that's not going to help you. So I'm going to skip around a little bit. I've got until, I believe, 5:30, so I've got just a little bit of time to help you out as much as I can. So congratulations. You're in the right place at the right time, and here's why. I'm going to show you what I believe is a great way to take your trading to the next level, okay? Now, if you're a candlestick person or if you're a chartist if you're into technical analysis and you're not really into fundamental analysis, you and I are going to get along just great. You now have a new opportunity to take your trading to the next level. So the first thing you're probably going to ask me is, what does this work on? Okay. Now, this works on stocks. This works on options. This works on futures. It works on Forex, currency futures and spot Forex. It works on bonds. It works on gold, and it works on a lot of commodities. Now, it does work on some things better than other things, but right, you knew that, right? Nothing works on everything. That's impossible. And there's no such thing as a risk-free trade or a riskless trade. In order to make $1 million in the markets, heads up, you're going to have to risk more than $5. Hopefully everybody understands that in order to make money, you got to risk some money. All right, so this is going to be a little bit different, but in a good way. I'm going to skip and jump right into the meat of the presentation. Before I do that, I want to give you some backtesting models so that you'll see how successful you can potentially, there's that word potentially again, right, be with this strategy. So in the S&P 500 over the last 5 years, that's a pretty good stretch, right, over the past 5 years. Stocks in the index, out of 500 of the stocks in the S&P 500, it has worked on 430 of them. So in other words, it's worked on 86% of the stocks. That's a pretty good number. That's not bad. Now, it would have returned you a 33% return if you took every signal. So in other words, if you're in a major uptrend like this, you would have went long here, short here, long here, short here, long here, and then short here, and then long here. Every signal, right? Now, that's hard to do. I don't know about you. I've been trading for 22 plus years of my career. There's probably only a half a dozen times I've got the dead low of the tick of the move and the dead high of the move. Only like a half a dozen. I've been trading for 22 years, so that's kind of hard to do. So what I recommend you do is you only trade in the direction of the overall major trend. And if you do that, you're going to increase your return from 33% to 79%. Now, it's more boring, yes, but it's more conservative. It's also more profitable. 79% versus 33%, no way around way you look at that, that's just a better return. Now, what you're going to do is you're going to use a this says day, this should be bar. It's a 3-bar confirmation when I show you this strategy, all right? And it works across most of the stocks in the S&P 500. Now, if you trade Forex, it's been profitable on 29 currency pairs over the past 10 years. That's good. I mean, there's not many strategies that last more than 3 years. And on stocks, it's lasted the past 5 and the past 10 years in either currency futures or spot Forex. So that's pretty good. My favorite time frame for this strategy is going to be this. We're going to spend a lot of time looking at some live charts. I'm going to try to speed through this as fast as I possibly can, and then I'm going to go through physical charts, like real charts in example, and show you like, hey, here's some trades that you can take with this. I'm also going to show you a free way that you can scan for these trades to put this into practice as early as tomorrow, okay? So I go daily, 60, and 10-minute, and I just call it D6010. Those are my favorite time frames. Now, you can use different ones. You totally can. Now, before we get started into the meat of the presentation, it's really important for you to understand what is your time horizon. If you go, hey, I'm only a day trader, I'm going to be out of it by the end of the day. All right, then what you want to do is if you're going to be in it for hours of a time, so it's just hourly right here. If you're going to be in the trade for hours, you're going to use a 5 or a 10-minute chart. And the reason you're going to do that is because to the right is it's going to extend your signal 2 to 4 hours. Now, the cool thing about this strategy or tactic is it's one of the few in the world that gives you the past, the present, P-R-E-S-E-N-T, and the future of what is going to go on with whatever you're trading. Now, if you're telling me like, hey, I'm going to be in this trade for at least 3 to 5 days, I'm going to be in it for longer than a day trade. All right, so days, then you're going to look at a 60-minute chart because the signal is going to be valid for the next 3 to 5 days. Now, if you're going to be doing longer-term swing trades, something that's longer than a week, in other words, something that's longer than 5+ days, 5 to 21 days, then you're going to look at a daily chart because it's going to extend 20 full trading days or 1 full month. So it's very important that you pay attention to this cheat sheet here, time frame selection. It's really going to depend on what you're doing. All right. Okay. Now, this is what you want. This is the #1 technique used in Japan. There has been a book that's been on the #1 best-selling list 7 years in a row. 7 years in a row that shows this tactic. Now, getting it translated is a bear, right? And there's about 5 or 6 other books in the U.S. You know, a couple of them are decent, and all the rest of them are not great. You can spend a lot of time and sweat equity learning how to use this, or you can just watch this presentation. You're going to know exactly what's happening on the chart in seconds. It actually means at a glance. It is very clear on trends and or signals. It's designed to produce crystal clear signals. So let's dig into this thing. So this is what it looks like. This is called Ichimoku. Now, Ichimoku means at a glance. And this is how you spell Ichimoku. If whatever charting platform you're using, it should have Ichimoku. If it doesn't have Ichimoku, you need to switch charting vendors. It just means that they're behind the times. So here's how you spell Ichimoku. I-C-H-I-M-O-K-U. Ichimoku, and then some people call it Ichimoku Cloud, C-L-O-U-D. So that's how it works. Now, this chart looks very ugly to you at first. It also looked very ugly to me at first because I was like, man, that's a busy chart. There's a lot of stuff on there. But we're going to break down what each piece is and how it's calculated, and then I'm going to show you how powerful this is. The big takeaway that you need to take away from the entire presentation here on Ichimoku is if the price action of what you're trading is above this cloud, so this is the cloud. You see where I'm tracing the cloud here? Sometimes it's red, sometimes it's blue. So this is the uptrend cloud. See this? The price action of Apple, when it's above that, that means Apple is in a valid uptrend, and we want to buy all tests to the fast, the medium, and the cloud. Okay? Now, when Apple closes below the cloud, like it does here, we are now in bearish territory, and anytime it jumps up to the turning line, we want to short it, short it, short it here, short it here, short it here. We definitely want to short it here. We want to short it here, and we want to short it here. That just means we're in a bearish move, all right? So it does look complicated at first, but we're going to break it down real quick. The line that is closest to the price action, and in this example, it's this red line. You can see right here. I'm going to extend it right here. This red line is called the turning line. You can also call it the fast line if it makes it easier for you to remember. The turning line is all it is. It's a midpoint calculation, and it's taking the high and the low of the last 9 days, and it divides them by 2. So here's how that works. What you're going to do is this would be today, and then you just count back 9 bars, 9 days, and then you take the low, you take the high, you add those 2 figures together, this number and this number, and then you divide them by 2, and you magically, deliciously get 450.07, right? Now, you don't really have to know how to do this math because your charting platform should be doing all this for you. So that's just how you calculate, because a lot of people are like, oh, it's a 9-period moving average. Nope, it's not. It's a 9-period midpoint is what it is. 9-point midpoint average, not a 9-period moving average. It is different in the way that they're calculated. All right, so that's how you calculate that one. Now, the standard line is the next one closest to the price action. No, we're just a little bit further away. So you got the close one, the fast line, and now you got that's the turning line. Now you got the standard line, which you could also call the median line, you know, because it moves a little bit slower. It's not super fast. It's kind of mid-range. The midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars, then you're going to divide those by 2. That number is your midpoint. That's your physical number. So let's do a calculation there. Standard line. So you can see this is the turning line. This is the standard line. And you can see is when it's below, when the cash is below, the price action is below the cloud, these are going to act as resistance levels. Now notice this is the present, this is the past, and this is in the future, forecasting you that Apple is probably going to jump up and go higher because this cloud is blue. So let's calculate the standard line. Standard line, you take today, you count back 26 bars, you look for the low, you look for the high, you add those 2 numbers together, you divide that by 2. That's going to give you this number, 425.42. Okay. Now I'm not some whiz-bang mathematician. All I'm doing is I'm letting this little green hash mark here do the math for me because my system calculates it for me, and yours will too. I'm not here to sell you Ichimoku at all. I'm here to show you how to use it. Ichimoku is on almost every decent platform out there. It's on TOS, it's on TradeStation, it's on eSignal, it's on Ninja, it's on MT4, it's on all of them. There's a few it's not on just because they're just behind the times. And if you have one that it's not on, I recommend you switch. All right, cloud span B is a little bit more complicated. I'm going to go through this in a little quicker because we're running out of time. All you're doing is you're going to take the midpoint of the turning line and the standard line, and you're going to shift those bars 26 bars forward. So here is the what was this called? This is called the turning line. This is called standard line, and you're going to take a midpoint between T and S, and then you're going to shift it forward in the future 26 bars. That's your new what? That's your new support. Once this price action gets back above that cloud, if it sells off, it's going to go there and it's going to bounce. Okay? So that is cloud span A. Cloud span B is the midpoint of the high and the low of the last 52 sessions shifted. So what you're going to do here is you're going to take, for cloud span B, this is day 1. This is day 52 counted back. Then you're going to take from point A, from point B. You're going to look at the midpoint here and then shift that, and that's going to give you the other side of the cloud. All right, so now you've got cloud span A and you've got cloud span B. This is the midpoint between the standard and the turning line shifted forward, and this is the 1 all the way back to 56, and boom, you're going to shift it up here. So that gives you your overhead resistance cloud. All right, the lagging line. Lagging line is one of the most important lines on the chart. The lagging line is the price line close shifted 26 bars. Best way to think about this is the past. Okay, so here's what the past is doing. The past is the blue line. So you can see right here's the present price action of what's going on in Apple on this snapshot. All it's doing is it's shifting back and going, okay, boom, there's where I am shifted back. And one of the strongest signals that you can take is when the lagging line crosses either above or below the cloud. Okay, so let's take a look at that. Here are some signals that you should be aware of that are really, really important. Lagging line crossing the cloud. Write that down. Lagging line crossing the cloud, huge trend reversal. Price crossing the cloud, huge price reversal. This would be the strongest. It's also going to happen last. Okay, it's kind of like a confirmation of a confirmation of a confirmation. This one is the second strongest. It's going to be a little bit slower, but it's not going to be as slow as the lagging line. And then you've got price and lagging line touching the cloud. That's a decent signal. And then the cloud span crossing, that's a signal. And then the turning line and the standard lines crossing, kind of like a moving average crossover. It's a signal. It's very unreliable and inconsistent. You have to be really careful with that one. So let's dig in here a little bit. All right, so the best signal that you could potentially take is when the lagging line crosses the cloud, because when that does that, that means that this thing is going to be getting smoked to the downside. Once you've got that in place, then you know anytime that you jump above the turning line, you're probably going to go to the standard line, and that's a good short in that area. Also, if you're lucky enough to get any price action that gets close to the cloud, that's a good short area because you are in a very good, massive bearish move to the downside because the lagging line crossed the cloud. Same thing here. Check this out. So this would be a sell. This would be a sell because this is overhead resistance. Notice where the lagging line is on this chart when we're in the actual present price action. The lagging line has not crossed the cloud. Now, if it did, if you had 1, 2, 3 bars above the cloud and you had this lagging line also above there, that would be a total trend reversal for Apple, and you'd want to get long and hold on as long as you possibly could until, once again, it shifted below the cloud. All right, here's the second signal, second to the last signal, when the price action crosses the cloud, and number one bar crossing would be aggressive. Well, it would be actually super, super aggressive. 2 bars crossing the cloud would just be super aggressive, and 3 bars would be aggressive, but nowhere near as bad as 1 bar. And if you can get 1 to 3 bars below the cloud, and I'm saying you should wait for 3, and you can also wait for the lagging line to cross, that is the best primo signal that you can get with Ichimoku. But not everybody's that patient, right? And you're sitting there going, yeah, man, as soon as Google crosses 1, 2, 3 bars above the cloud, I'm going to get long. There's nothing wrong with that. Just know that it is a little bit more aggressive trade setup. Now we've got Apple here. The price action is below the cloud, so we're bearish. So at any time that we get the lagging line to touch the bottom of the cloud, which is our overhead resistance, or if we get the price action to touch the bottom of the cloud or the top of the cloud, those are good sell signals, okay? It's rising into resistance. All right, now you can also, these are more fast, more inconsistent signals, is when the turning line and the standard line are crossing. If you can get the price action to go below the cloud and the lagging line go below the cloud, then you can do a crisscross. So here's the first criss, and here's the second cross, so that would be a good short. Same thing here. Here's the first criss, and then criss, cross right there. And that's a good short right there. So it's a really good trade setup. Heads up is a little bit more inconsistent than the other two. All right, let's go through. Let me see what else I got here. Bullish and bearish signals. How do you guys feel about moving into some charts? And what I will do for you is I will do basically what I do in my nightly member video and show you how I go through the markets, and then I'll show you a really just a free way to scan for trades, and it's totally free. It won't cost you a dime. First thing, you got to have this spreadsheet here. This is going to depend on what you're looking at. And then you also want to know your time frame. My favorite is daily, hourly, 10-minute. And then the best stop to use if you're going to do long or short is a parabolic SAR. And if you're long, you would use the bottom of the cloud. And if you're short, you would use the top of the cloud. So here's what I'm going to do. I'm going to go straight into charts. Okay, so let's do this. All right, so I'm gonna do analysis on the markets in real time for you, and I'm gonna show you how to scan. Okay, so first off, I can scan with this system in TradeStation. I can just scan and tell it to find me trades that are above or below the cloud on Ichimoku, and it's a really easy way to do it. You may not have TradeStation, you may have something else, so I'll show you a free way. First thing I'm gonna look at is I'm gonna look at the ES. So right now, knowing what you know, you would say that this is in a massive uptrend. We are above the cloud. And I'll even expand this for you. Look how pretty that is now. Now it's a little bit easier to look at, right? The S&P is above the cloud. Watch it. It's sold off to the cloud, which is our support. Boing, boing, boing. Notice that? Now, this is in a massive uptrend because it's staying above the turning line. You had one close below, but it's staying above, which tells you that the S&P wants to go higher. Okay? Now you're sitting there going, well, that's great. How do I trade that? Okay, so here's what you do. The daily's in an uptrend. The 60 minutes in an uptrend. All you do is you wait for a 10-minute to cross over. Now, do you remember from your chart when we were looking at that thing, a 10-minute is going to be how good? A 10 minutes is going to be good for 2 to 4 hours. So if you notice this cross right here on the S&P, you know once that crosses on a 10-minute, you're good for 2 to 4 hours to the high side. Same thing today. We crossed right here. We're good for 2 to 4 hours to the high side. So that's the S&P. All right, let's take a look at the Dow. Dow, a little bit weaker, right? So let's go into some education here. You see where it closed below the yellow line? That's called the turning line. Well, odds are if it closes below there, it probably wants to go down here to the 16,566 area, which is the standard line. In this case, it did not. It actually worked its way back up. So it's going to be a good long. 60 minutes is a long. And then also you had a good long yesterday right here. You closed above the 10-minute cloud. Tells you it's going to be 2 to 4 hours up. And now today you did it again. We're going to have 2 to 4 hours up to the high side. So that looks really good on that. NASDAQ never really got below it. Look at this. Look how strong the NASDAQ is. The NASDAQ sold off into the turning line. So can you see how powerful this is? You've had 3 candles above the cloud. The lagging line confirmed it and goes rocket ship. And then every time it sells off to the yellow, you're going to pick it up here with a tight stop loss, and your targets are going to be above that. The 60 and the 10-minute are going to work the identical same. Now, I'm going to blow this one up because this is a trade that I missed by just being a little bit too cute. I bet you've never heard that on a webinar, right? A guru missing a trade? That's impossible, right? It actually happens all the time. I trade almost every day. Not every day because not every day you can trade. So here you've got 1, 2, 3 bars above the cloud, and the lagging line's also above the cloud. So what I want to do is I want to buy it long, right? So what I did is I placed a bid to buy it right here at the top of the cloud, and my order was to buy it at $11.45 and 10 cents. Unfortunately, it did not give me a fill because I was being, in the industry we call it being a dick for a tick or a weenie for a teeny, right? Like I was just being too much of a perfectionist on this trade. And I could have gave up 2 points and I would be up a huge amount of money right now. So I just missed that trade. So I have to wait until I get a little bit more of a pullback. So my next trade for this situation is I'm going to be bidding at 1164.95. Okay, so that's a trade that I just missed just because I was trying just to be a little bit too cute with it. All right, let's go into the 30-year bond. 30-year bond. So the 30-year bond is in a massive uptrend, as you can see. Now, what do you think I'm wanting to do here on the 30-year bond since it's in a massive uptrend? It's touching the top of the cloud, so I want to start buying some 30-year bonds. If it can get back above 135.15 30 seconds, I want to buy that with a target of 136 and 13 30 seconds, which is basically about $1,000 per contract per point. Okay, so I like that trade setup. And then let's take a look at the 10-year. A lot of times the 10-year will kind of give you a forecast of what the 30-year is going to do. And the 10-year's already jumped above, so we're looking good here. So the 30-year will probably bounce pretty good for us tomorrow. All right, now let's move on down here to, this works on futures, stocks, options, Forex, GC. Let's take a look at GC. So GC, we had a trade that was an ambush trade. So notice when GC is below the cloud. Does everybody see this? Notice when it went above the yellow, where's it going to go next? Purple. Above the purple, where's it go? Bottom of the cloud. This one's actually got a little bit away from us. So we have to let this one trade just a little bit. But the 60-minute and the 10-minute caught it. You can see here in the 60-minute signal, if you get a 60-minute signal, it's good for 3 days. You're going to probably have 2 more days of gold moving to the high side. Okay. All righty. Let's see here. What else we got? We have got some crude oil. Let's talk about some crude at CL. So crude oil, easy trade, easy trade. Massive uptrend, is above the cloud, is above the turning line, is above the standard line. I want to buy it at 104.66. Use a stop of 103.80, and the target's going to be 108 even. So those are some of the things that you can do with Ichimoku. It's very easy. You will know exactly what's going to happen at a glance, and here's why I'm saying that. The white is the past price action. The current price action is on your screen right now, and it's projecting in the future that crude oil is going to go up. You see this slant in the cloud? It's blue. You're above it, and it's rising with you. If it sells off, this cloud will act as support for you, okay? So that's what you're looking for. Now, I've got about 15 more minutes. I don't know if you guys have the ability to enter in questions that I can actually see them. Usually what I do is you throw out my symbols. So I'm just going to take some symbols and just throw them up here. G-O-O-G. Let's take a look at G-O-O-G. Google here is in a situation where it's a no trade. It's below the cloud. The lagging line's below the cloud, so I would leave Google alone. Let's take a look at Tesla. T-S-L-A. Tesla, T-S-L-A. You don't even have to be able to type to trade. So Tesla is a 1, 2, 3, 4 bars above the cloud, and the lagging line's above the cloud. This would be a fresh buy signal, and what I would do is I would enter this on a 10-minute signal. So this is a good trade with a stop of 217 and a target of 250. That's a pretty good looking trade setup there. Let me show you a decent swing short, ISRG, that we're in the HIC members area. We are currently in a short at 402.74. Stop is 411, and the target is 371. Here's why. It's below the cloud, and we have slammed our head into overhead resistance, and this is a big, thick resistance area, so we like that short. Now, let's take a look at some other stuff. CAT, Caterpillar. Some more boring stuff. So Caterpillar is in a massive uptrend. Anytime it slams into either the turning line or the standard line or the cloud, you can see that it usually bounces out of there very, very nicely. All right, so that's some trades. Let's take a look at what else. DDD. DDD. Where's DDD at? DDD is below the cloud. It's working its way through the cloud, but right now it's still a better short than it is long. But you've got some support at 45, so this one I would probably stay away from. Let me grab just one thing here. I forgot to tell you. I was going to show you how to scan for the markets, right? Like if you don't know how. So like I said, I have the ability because I can do a situation where I can just scan for it with Ichimoku on my screen, and I'll show you how I do this with TradeStation. So how I would do this with TradeStation is I would go like this. I'd go right-click. I would go Insert Analysis Technique or Format Analysis Technique, and then I would go look for Ichimoku right up here. Okay. And it's under the H's. Where's that? Where you at, man? Where you at? there you go, I went the wrong way, Ichimoku. I would hit add, and then I would hit, let me move it down, and hit OK. And now what I can see here in my scanner is it'll tell me if the trend direction is up, down, or if it's moved new above the cloud or new below the cloud. And there, hopefully y'all can see that. I'm going to resize this real quick. So this is what I would do. See where it says in the cloud, above the cloud, new below. See where it says new below? Well, I can just scan for that stuff, which makes my job a little easier. Not everybody has the ability to use TradeStation. So let me show you a free way that I teach people how to use in order to make their life a little easier. So if you go over to stockcharts.com, if I can spell STOCKCHARTS.com, stockcharts.com, and then in the lower right-hand corner of the screen, so this is stockcharts.com, STOCKCHARTS.com, stockcharts.com. And then over here, I'm going to blow this up so everybody can see it real big. All right, and then we're going to scroll down. Down here where it says additional tools, predefined scan results. Click there one time. Okay, now if we all do it at the same time, we'll crash their server, so be careful. So here it says technical indicators. You're going to scroll down here, and you're going to say candlesticks, because everybody loves candlesticks. All right, and then you're going to look down here, and you're, oh, look here, Ichimoku patterns. Moved above the cloud or moved below the cloud. We want to click on 253 and 106. All that means is there's 253 that moved above the cloud, and there's 106 that moved below the cloud. That's pretty cool. And then you can see here's the ones that moved above. We're going to sort those by volume, and then we're going to be like, okay, Rite Aid. We've got GC, Gold Corp, GG. That's Cosmo, Hertz, EMC. So that looks interesting. Let's take a look at what we got. Let's take a look at EMC here. So we're going to click on this chart right here. And then from this chart, you can scroll down, and you got to change a parameter or two. Just go overlays. You want Ichimoku full, and then on moving averages, you don't want any, and then you're just going to hit update, and then it'll update it for you. So here you can see, here's a good trade. EMC, the price action has moved above the cloud. Also look that the cloud on the lower, on the far right is turning red to slightly green right here. So that's a decent trade setup right there in EMC, right? Now the lagging line, it would still need to kind of come up a little bit, but EMC is not a bad trade setup. Let's take a look at one of the predefined sell signals. You can do it like it there. We're doing it by volume. Let's see if we can find Express Scripts. We'll click that button right there. And then what we're going to do, we're going to come down here and change our parameters for our overlays full. We'll change this to none, and then we'll just hit update, and then boom. Oh, look at that. That's pretty, right? Even if you don't have great charts, this is still doable. So now Express Scripts, ESRX, has moved below the cloud. That's a good trade with a short stop of 69.86 and a target down here below 66. So I'd say probably $66. So that's how you do it, right? So pretty simple. I go through all this in a course that I have on Ichimoku. So all right, so let's take a look at some of the charts. So time frame selection, we covered that. Let's talk about success stories, right? Let's see here. I'm trying to skip around so I can get you all moved in here. All right, there's the stops, live trade setups. All right, success stories. Here are a couple success stories that people just send unsolicited testimonials. The course was awesome. I have taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade short again while I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had success trading during a course. I have the hardest head in the world. You couldn't have made it simpler. Dude, thanks. That was from Mary Ellen Reese. Dude, thanks. You are likely the only reason I have kept at it with trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the gold trading class. Thank you so much for what you do. The webinar series was a great experience, very informative and educational, lots of fun. But that's no surprise. All of your courses have been great opportunities and great values. That's from Ron. So will you be one of our next success stories? Heads up, I cannot guarantee your success. I can guarantee that you'll love the class, though, because if you don't love the class and the course, I'll give you my back. So I'm inviting you to join us. Who this is for, if you're serious about making real money in the markets, This is a good course to take. If you're looking for a proven system, this is a proven system. If you can follow a simple set of rules and directions, I will give you a simple set of rules and directions. If you know that your success is tied to you taking action and not me taking action, well, this course is probably for you. Now, more importantly, who is this not for? This is not for Holy Grail seekers. If you're a Holy Grail seeker, no offense, but you and I probably won't mesh well together. I'm more about really, truly teaching you how to trade. Okay? It's also not for people that suffer from hopium. If you hope this is going to just turn your trading around, if you suffer from hopium, you and I are probably not a good mix. Also, if you're a guru surfer, if you follow 42 different gurus and you can't make your own decision on your own, you and I are not going to be a good fit. All right? If you can't make a decision, you and I are probably not a good fit. If you like making things more complicated for no good reason at all, you and I are not a good fit. All right, so I just want to make sure. There's 3 types of people in the world: those that make things happen, those that watch things happen, and those that ask what just happened. I don't know which one you are, but those are the main 3 types that I see in trading and investing. So here's a fraction of what you'll get in the course. The #1 best-selling Ichimoku course on the market, 7 proven setups, trading rules and indicator settings. You're also going to get a checklist with cheat sheets, with entry and exit rules, stop loss and targets, how to scan the markets with Ichimoku, how to filter out the best trades. You will never guess on what to do next. I'll also show you how to avoid some critical head fakes that the market will throw at you. Okay? So in the course, that's a fraction of what you'll learn. You have absolutely 0 risk in the transaction with me. My business has my actual real name on it. My name is Hubert Sanders. If you're not satisfied, I will personally give you your money back. Okay? 100% satisfaction, no questions asked, guaranteed. If you don't love it, I don't want to keep your money. I'll send you on your way happy. Okay? I always over-deliver, period. My goal is for you to have 10 times the value of the course from the education with your trades. All right? So here is the link to order. If you want to order, you can go to hubertcenters.com/hunt, like hunt for trades, H-U-N-T. You can also call my office. I have operators standing by, area code 859-963-3445. Now, Ichimoku Cloud Charting Secrets retails for $197. I have sold it many times in the past for $197. How to use Ichimoku candlestick, how to use Ichimoku with candlesticks is another course that I sell for $97. I'm also going to give you 1 follow-up webinar at the end of the month live, and I'm going to give you 1 day of live trading at the end of the month live. So the first 2 are pre-recorded. Ichimoku Cloud Charting Secrets is pre-recorded, and how to use Ichimoku with candlesticks is also pre-recorded. But the last 2 is, if you have questions, this webinar that we'll do at the end of the month, then that's what that's going to be for. And you'll have questions, right? Even if you go through all the videos, you'll probably still have a question or 2, and that's why that's there to design and support you. So a $488 real-world value special offer today is $97 only for the first 25 people. You go to hubertcenters.com/HUNT, like hunt for trades. The telephone number is area code 859-963-3445. HubertCenters.com. I am going to put that up there. Oh, they've already got it for you right there. They've got a link for you, HubertCenters.com, and area code 859-963-3445. Guys, thanks for having me. I really appreciate it. I've got 3 more minutes here. I don't have the ability to see your questions, so what I'm going to do is I'm just going to wrap up. I wish you the best of luck in the trading for the rest of the week and your rest of your trading career. Hopefully you take the leap of faith and buy the course. You have no risk whatsoever. Like I said, if you are not 100% satisfied, I will give you your money back. Okay? No questions asked. All right? That is Ichimoku Cloud Charting Secrets, $197. How to use Ichimoku with candlesticks for $97. 1 follow-up webinar where I'll answer all your questions in real time, and 1 day of live trading with Ichimoku. It works on stocks, options, futures, forex, and bonds, and you'll have all my settings. If you don't have a good chart vendor that has Ichimoku, just switch. There's a million charting vendors out there. Good ones are TradeStation, TOS, Ameritrade, eSignal, Ninja. There's tons of really good ones out there that already have it. MT4, almost all of the big guys have it, and a lot of the small guys have it too. So good luck. Hope it helps, and I look forward to seeing you guys on the next webinar.
Awesome. Thank you once again, Hubert Centers.